Hello guys. So this is my analysis of EU on 22nd of January. I'm starting my top down at the monthly. So as you can see, I've marked out this dealing range, side is low, and there we can see this bullish refi gap at the 25% level, which its consequent encroachment is aligning up perfectly with the level. Then at the 50%, we can see this gap, which is a breakaway gap, which is very nice to see when you're on the buy side of the curve in this case. And now we are at the 70% level, 75% level, and there we can see some kind of consolidation going on. You might say that we are inside this order block. You can see, so this is the monthly order block. Okay. As you can see, price almost touched the consequent encroachment, price trades below, and now just wandering in the down part of this order book. But anyway, I think it is obviously that the higher time frame is overall bullish. Then we have the weekly. In total, zooming out, you see this consolidation right here. But you can also see I've marked out this weekly order block because this order block sends price higher. But you can see that overall we are in a range where this is the low and this point is the high. And you can see the boards are respecting and the wicks are respecting over here the midpoint of this range. Price trades above it, touch the extreme, and then traded back below 50%, which is in discount again, and there we find the order block. What's interesting here to me is that price was unable to touch the mean threshold of the order block, and now you can see this is the current week's price action, and now we are trading away from it with speed without touching the mean threshold, which is an indication of strength. And yeah, there's also this bearish refi gap, but it's not that important because it's not overlaying with a significant level to me at this moment, as far as I can see right now. Okay, going to the daily. So the daily, to me, is that I see a quarterly shift here at the beginning of this year. Oh, sorry, at December. Why? Because if we look back till December, September, from September on, September, October, and November, they went down. And then here we have an obvious market structural shift happening over here, and this happens in December. So to me, therefore, the 1st of December starts the new quarterly shift. And obviously the new quarterly shift is bullish. So yeah, a big part of January is trading to the downside, but this can be seen as retracement. So what had this move actually done? Well, to me, I noticed those equal lows resting right here. Those equal lows. Those lows were taken out, and now we moved away from it. And also, if we look at the highs, we can very clearly see here that we have relatively equal highs resting above in a very favorable manner, because the low on the right is lower than the high on the left. Oh, sorry, the high on the right is lower than the high on the left. So I think the reversal played out here. So what did I mark out? I did mark out this order block. All this down close consecutive candles are forming the order block for this move higher. And since price traded away from it, left the order block. So this is a chasing state of delivery. price never came back to touch the order block. So now with this retracement, there are no really big displacement candles. The candles are relatively small, as you can see. Here the order block was respected, but then it dipped down, taking out those equal lows, and now price is moving away with speed from this order block. And the same as the weekly, price is not touching, was not able to touch the mean threshold, and then we saw displacement higher. So that makes me believe we are on the right side again for bullish price action. Furthermore, if we look at the recent price action, this was this week's one day. This was Tuesday, this big candle. The Wednesday was an inside bar, meaning the low nor the high were taken yesterday. But we did left a bullish fair value gap resting right here. Also worth noting, I think, is if we measure this swing low to this swing high, we can see that the fair value gap is created at the 50% level of this lag. So that makes this a more high probability fair value gap. Okay, so for today, what could we expect? Well, bullish price action. Well, let's see how that would play it out. So here on the 4 hour, we can see here's the daily order block, but let's hide it for now for clarity. We know price reacted from there. So what I did here is I took that most recent high, which is this high, to the most recent lowest low, which is a dealing range because this high took out this high. It's obvious that there's plenty of sell side was taken right here for this low. So I graded this high, this lag, I'm sorry. So we can clearly see here's the daily fair value gap, and there's also this lag that took the liquidity out, and we can see that better on the 50-minute. But anyway, you can see the displacement here. We have multiple breaks of structure going on here. So the structure is taken, this take with a wick. So that is just a more important break. So what we also could do is mark out the breaker. Officially, the breaker would be this, all the upload candles. This is the breaker. But maybe in the lower time frames, you can refine it, maybe to this, and maybe to this. I don't know. We have to see it lower time frames. But this to me is the breaker overlapping with a fair value gap, which makes this a stronger fair value gap. Also notice that this candle right here taps into the daily fair value gap, also takes the previous day low, but closes back in the range. So this is a real total soup signature. And after this signature, you can expect higher prices. And this candle was printed today. Yesterday, I'm sorry, so Wednesday afternoon. So let's look at the 1 hour. So, well, wait a minute. Yeah, so also notice at the bottom, this should actually be the, let's reverse this one, should actually be the 25% level. We can see how price reacts on this level, right? Rejected, rejected, and then here we see the fair value gap being created, and the bodies are closing above this fair value gap, which is resting at the 25% level. What else do we see? Well, this is the 50% level. Look how price is respecting it with the bodies over here. And look also, if we create this fair value gap, let's remove this weekly for now. Let's show it here. Let's hide it for clarity. Also look, this is the bullish 4-hour fair value gap. And notice how the consequent encroachment of the 4-hour fair value gap is in very close proximity of the 50% level from this high to this low. So that's not a coincidence. That's just very nice confluence. So yeah, price filled the fair value gap, which is usually not something that you want to see. You want to ideally see that the portion is left open. But if we measure this rather large gap, we can see that the bodies are respecting the 75%, which is the lowest value in the gap you want to see. If you have a closure below the 75%, that's this very weak signature, then chances are bigger that price will go lower. But in this case, prices respecting the bodies are respecting the 75% level. Wicks to the damage, obviously, this wick was tapping into the fair value gap and also taking the previous low, so killing two birds with one stone. And now in hindsight, you can see the expansion. So dropping lower one time frame to the 1 hour. What you can see here is obvious, of course, the same leg, but I haven't transposed it to the lower time frames. But what I do want to show you is this. Because this morning or this afternoon more, I was thinking price would go to the low of this daily inversion fair value gap. And the way that I kind of predicted that was by measuring the liquidity move. So I'm going to put a 15-minute, or maybe the 1 hour, doesn't really matter, it's the same. So what I do then is I take the highest high, and the lowest low, like this, because this is the leg, the entire leg that took the liquidity. And then I add my projections. No, maybe it was not the 1 hour. Let's check. I probably only 15 minutes. Yeah, I'm sorry, it's the wrong leg. It was this leg right here. Oh, it is still on. Here it is. So let's make this bigger. Okay. So ignore all the levels in here that is from my study. But basically what I did was this was the 4-hour candle tapping into the fair value gap and closing back into the range. And this is how it looks on the 15-minute. As you can see, this is the previous day low, and this high to this low is what took the liquidity. And usually this is a quick move. This all, in this case, candles and all bearish candles, and obviously in a bullish situation, it would be all the bullish candles that takes out liquidity. It's often a very quick move, multiple candles of the same color. So this move took the liquidity and then moved away quickly. So basically on a high time frame, this would be a turtle soup. So I measure the high to this low and then apply projections to it. And what I noticed was that the 4 standard deviation was aligning perfectly with the inversion daily fair value gap low, as you can see right there. So this is not only thing that I use, of course, because the other thing I noticed, of course, was this change in state of delivery. So that let's fade out more. Okay. So what you also can do here is measure this move. So we measure the high because obviously we are in the dealing range. Why? Because we took out all this buy side liquidity, we took out the sell side liquidity. So now we have a new dealing range being established. I'm going to hide this one a little bit because it could get too much. view said, okay, now we can right. Okay, so it's better. Also, I think the fair value gap is clear now. So this is the fair value gap. Let's go back to this fair value gap, which is this one. So I'm going to replace this one with a can box, which I have prepared so the quadrants are very visible. So let's go back to the 15. And I'm using this for confluences. So let's maybe that's what I can do that. Okay. So we tapped into this imbalances and now we trade it away from. So this is Asia and then this is London. So as you can see, Asia made a small move in London, was mainly consolidating, and the real move started a little bit at lunch, and then New York and London closed, just finished the move. But if we look to the levels, what we can see here is this candle right there is overlapping with the lower quadrant of the 4-hour fair value gap. So if I draw that one in, this is a bullish 15-minute fair value gap, and we can see how price is respecting that fair value gap. It's touched multiple times, but look at the bodies. Mainly the bodies are closing above this fair value gap. And again, here is our changing state of delivery. So what we now have is an order block in combination with this fair value gap. So this is a powerful combination, especially when this order block is also taken out big time liquidity, which the previous day low is. So then when we're consolidating a lot, and then finally the price took off. So was there an entry possibility? Now let's see. This is the 25% level, and this 25% level also has this value gap, right? This is a bearish value gap, which is laying over the 25% level of this dealing range. And with this move right here, price is closing and rejecting 25% level, and also playing inside and staying below the upper down half of this value gap. And price has really finding really some trouble to close above it. So when I saw this, to be honest, I was waiting for all this sell side to purge first before making this move. So I was because I was really thinking power of 3 accumulation, downward for the manipulation, and then the move higher for distribution. But that didn't happen, so that surprised me a bit. So then what we have is we have a strong close here above this value gap, but also above the midpoint of the 4-hour value gap. So let's go maybe one time frame lower to the 5-minute. Let's remove this one. I'm sorry, I think this is too much. This is a thing. Let's do just a flip. And make this dotted. Extend it to the right. Get the nice color, green, 2 pixels. Also notice how I'm going to talk about it. Sorry. So lots of lines now. In the 5 minutes. Okay, let's see. Where were we? Yeah, we're consolidating here. So price going up and down. High resistance conditions. But where would the entry be? Was obviously you want to be part of this move. So in here, this is interesting because what you can see here, price took out this high and this high with this move here. Price trades lower, so we took liquidity. We did not close above this high. We did close above this high right there. But this is the more important high because this is Asia high. So we took Asia's highest liquidity. After that, we consolidated. We were still respecting the midpoint of the 4-hour value gap. Then price really displaced lower, also leaving a value gap. And we traded below this dot line, is the midnight opening price. Maybe I should make this blue. Okay. But then, as you can see, price is respecting the 15-minute value gap. And not only that, but price did only take out this phantom trend line liquidity and was respecting some kind of black candle or plenty of black candles here, downflow candles. So obviously one of those candles is being respected. I cannot say which one, but obviously price is respecting something. You might say maybe it's this one, but yeah, I'm not sure. And for what's worth, not sure if you can see it. Make it darken up a little bit. This is the one standard deviation of the manipulation move, right? The price is also respecting that. Lookout price is also using that as kind of a support, and this is something that I'm still investigating. And I'm looking at it, so I'm not really applying it to my trading, but I do pay attention to it, how price is reacting to this level. What you also have is a 25% level of the dealing range, because we have a really strong move from this low to this high, which I now think this is a dealing range of 5 minutes. So let's see what that gives us. Let's extend this a bit. Okay, yeah, so price reacting from the 75% level. Yeah, okay, this is just okay. Anyway, I think the most important thing here is that price took Asia high, but was then failing to push lower. Instead, price was respecting the value gap. Then price pushes higher and is stuck in between the 4-hour value gap, and here it is respecting the 25% to the pip. So here are the first few clues that price might expand. This low did not take out this low, was respecting some kind of bearish candle, and then we are really displaced higher. And we have here a very strong close below these highs, but also a strong close again above the 50%. And we get at 1, 2, 3, 4. It's now the 5th time that price is closing above the 50%, so I would be very cautious. And also look where the bodies are stopping, exactly at 1.5 deviation of that swinging up. But then price traded lower, did not take out this previous candles low, and actually we created a small value gap here, so still very cautious. And here's an inversion value gap. That could be an interesting one. Yeah. So whenever I see confluences like this, that means threshold is overlapping, in this case with the midnight opening price, I think that's as a more significant value gap. So we close above it again, price touches the upper level, then this candle was a big manipulation move. Not touching this, it's just probably touching the smaller block right here. And this portion could be the first sign that price wants to explode. But again, it's not very clean price action, but you can look maybe on the 1 minute, what's going on there. should trade that. Okay. So price trades down, and now we trade it higher. So now I don't see, yeah. We're wandering now around this. For me, the 50% level is an important level. I like to see that to be supported. Yes, this is a wick. This doesn't damage, and then we consolidate it, and then we expand it again. So there might be an entry here. Why? Because it's another change in state of delivery, and price is not. This portion is saying that it doesn't want to trade any lower anymore, because we took out Asia high right there, and we took out this high. Those are now, you see it better. Look, this high and this high are now relatively equal, right? So they're perfect for a turtle soup. But instead of taking out that high and move lower, that's a fake move. You see, took out the high and then made a very fake move to here, and then it returns all the way back up, closing above the 50% level. This on its own, this signature in combination with taking the equal highs and not willing to trade lower and closing above the 50% level, to me, that's a very big signature. It's very nice. So that could be an entry on itself over there. Next, what happens is prices trading higher till where, well, with respecting the 2 deviation level and just below the 25% level of the 4-hour fair value gap. But now we really have moved away and taking out Asia high, and we're really moving away now. So then that was lunch, which made this move up. So we have London consolidation, lunch expansion. So at the beginning of New York, we can expect a Judah swing, which we get here. The second leg, obviously the Judah swing. So maybe on the 15-minute, there's a fair gap or something. Yeah, there is. Let me remove all this stuff. Like so. Okay, so this is the low that was created by this high. So let's see. We do this, and you can see this fair value gap is sitting in the middle. So it's a high probability fair value gap. Nice. So mark that out, and you can go to the 1 minute and look for and wait for an entry, right? So what happens here is price consolidated in here, price shoots away, price consolidated again, and price reverses. So obviously on the 1 minute, the dealing range is way more clear. You could argue that this is the dealing range, but it's pretty far-fetched. To me, this low is way more clear. It really stands out. The dealing range, something like this. And this is the same low we use on the 15-minute time frame, I think. So we are at the top. We look at this 25%, the dealing range is in alignment with the 25% level of the 4-hour dealing range. Here, the equal lows were engineered, also this low, and then we trade it down, down into the 15-minute fair value gap, and let's look at where the bodies are closing. The bodies are closing exactly at the mean threshold, or sorry, at the consequent encroachment of this fair value gap. Price trades down, takes out all these equal lows. Not sure what it is. Goes here, takes out the bodies. Then price shoots away. Now we can apply a dealing range from this high to this low. So this orange block is sitting exactly at 25% level, so that's something that immediately catches my eye. And this also becomes a breaker, of course. Meaning threshold overlapping the 25% level. Also closing above this high right here, this one right there, which is what? A change in state of delivery. So we are respecting the bodies at a 15-minute mid-level, 15 minutes with like a mid-level is respected. And price shoots away. We want to see speed. So exactly what we got. We see here what the change in state of delivery. And then here a new value gap is being created. So we have a few confluences right now. So that would be a nice entry. So if you miss London or you did not and you want to re-enter, this is a nice re-entry. Stop loss something here. The target. Well, let's see for the target. Let's go to 15 minutes for the target. So here we are. So we are now kind of in the middle of the range. You can also see here that the bodies are respecting the 50% level of the current parent dealing range from this high to this low. You see here there is this order book formed, there is propulsion block that's created based on the order block which was created at the 25% level. So the target, if you enter here, yeah, there's some swing high over there. So you could take that one from 1 to 5 to be very safe. Then there's nothing really much going on. Yeah, there's this high, of course. So you could target that one, which is perfectly aligned with 3.5 deviation. So there's definitely a high where you want to take profits. And ultimately, I would have set my TP to here because price can react from this value gap, make a reversal or whatever. So that is a very nice trade for 1 to 6. So that would be the target with partials on the way. But okay, let's see what happens. I think it's all clear that this trade will play out. But let's see how price is reacting. I'm going to make this a bit more solid. Okay. So then price moves away from it. Let's see with 15 minutes. What's the lines now? So I'm gonna so this is a value gap. But the value gap was respecting all the time and then it just shoots away from it. And that's about it. So I'm gonna remove that's in 5 minutes. How is it reacting on? Yeah, okay. So it's consolidating at the high of this value gap. And at 25% level of the value gap, there's also some kind of consolidation going on. Maybe do 1 hour. Let's see how that one is reacting to it. Only bullish candles. Only bullish candles. Okay. So I'm going to remove this one for now. Now I want to see how the dealing range levels are, what price has done with it. So it's pretty interesting, I think. And 50% level, it created the breakaway gap, the measuring gap, I'm sorry. The measuring gap. So that's created on the 50%. Then we got some price action into the 75% level. And again, the small gap was created over there. And here. Like so. Was respected and then price took off and took out the dealing range high. But also is interesting to me, where I got my attention, is look at the standard deviations from this. Like look how price is reacting to deviation. The price is kind of respecting it with the bodies. Well, only this downward candle is not respecting the line of this body, this body, this body, and this body. The closing, the openings are all on top of the 2 deviation level. Same is here going on. It stops and it opens exactly at 3 deviations. And at the 4th deviation, look at these bodies here. And also, of course, where it overlays with the inversion Vijayka of the daily time frame. So now what I like to do is see if there are some projections from the 25. There's not really maybe this one. I'm not sure. I'm going to use this one first. Yeah, projections. Okay, pictures. I like this. No. Okay, okay, forget about it. Okay. So anyways, what I think of today, I think is pretty awesome. That is leg that took liquidity, it uses protections, and it lines up perfectly with the inversion daily Vijayka. Also, what's pretty awesome to see is that PD arrays, which are formed at the dealing ratio levels, are really important. Here again, it's very obviously respected in the sense price higher at the 75% level, same thing, and then it shoots away. And the only thing I haven't yet figured out completely is where the value gap is. And then maybe it's this one, there's this one, there's another one. So I'm gonna figure that one out. But yeah, anyways, for now, the daily, I'm still bullish. We are now trading towards this value gap. We have obviously some news going on, but I think longer term, again, price not takeout is equalized, mainly also because I think we are in a bullish quarterly shift. So that's it for today. I hope you enjoy it, and until I speak to you next time.